This is Stephen Story again with tips on trading. Now let's talk about high probability trading. High probability trading is when you have taken a look at the market, you've tracked it, you've researched the currency pair you're going to be trading, and you've learned to identify the difference between what is a high probability trade scenario and something less than that. High probability traders only choose those segments of the market that give them the highest probability of success in that trade. A high probability trade is one where if you choose it correctly, once you become consistent in your ability to choose and select those properly, you can, in many instances, increase the leverage or increase the percent of your account that you're trading, the number of lots you're entering. You don't necessarily want to stay in that position because the market changes and shifts. You may have a high probability scenario for a limited period of time and then it changes to something less than high probability or becomes deceptive. You need to learn how to identify those segments which are true high probability versus those which are deceptive high probability segments in the market. And there are very real conditions under both of those segments. I work with my students to teach them the difference there, and the whole point of this is to know how to trade and when not to trade. You learn to identify high probability, you stay in the market when it's high probability, and you learn to get out and not trade at all when it changes, when it shifts. That's tips on trading, and this is Stephen Story.